from Sigurd, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the quick stock market analysis show that we have during the weekdays, and this is analysis for tomorrow, number 8, Wednesday, 2023. And basically we look at the charts and then try to make sense out of how to plan for the next trading day tomorrow. Technical charts basically, right? So we had a very volatile day, and finally the markets closed flat with banks showing some green. That's what happened today. So yesterday it was the broker glitch that closed panic, and today it was the high volatile Finity expiry, and even then their indexes moved here and there, up 100, up down 200, up 100. So let's see the charts and then come back here. So that's what we are. Also, if you look at Nifty, we know that we are in a reversal path after having corrected some 7%. And today's candle, if you see, it's dragonfly doji indecisive candle close is what Nifty has closed, right? And the big size shows that it was highly volatile. It did a V-shaped move. This is what happened intraday. Very volatile. It started in the morning with the down and then up and down, and these are all, remember, it's all 100 points kind of dip. I know 100 points dip, and then finally a 250 points up move rally, right? Complete V shape, multiple V shapes, one V, two, one V, second inverted V, then another V, and then another V, and then another V. So it was very, very tough, and finally it ended up indecisive. That means there's a big fight between the bulls and the bears that's happening. That's why the market has closed like this, a dragonfly doji, right? But keep in mind that we had been having 3 days of gap up. Now there is some consolidation happening. Obviously resistance will be there because we are in that square box of resistance zones. We are in the bear zones, so there is heavy fighting there before we can take out that. We still maintain the 20 exponential moving average in Nifty. Bank Nifty, it was similarly volatile. If you see, the intraday, if you see, there was a down, and each down move was 300 points down, another 300 points up, another 300. So it was very volatile, and then finally it did perform little better after the 3 p.m. when it broke out, little extra to gain a green 100 points extra. Even Fin Nifty also was very tough, and if you look at the 5 minutes charts, it's a V-shaped recovery and then a 3 p.m. breakout with each very volatile between the multiple V's within the main reversal V. Very volatile and tough to trade for option. And finally ended indecisive just like the Nifty. And the Bank Nifty, it's a hammer. A hammer on the top of a rally could indicate that there's a potential for reversal, but it's confirmable if the price moves below the hammer candle's low, if it is in the downside. And indecisive doji, indecisiveness could indicate that there's resistance and then there's big fight and anything would happen, right? It could reverse from here. That's it. There's a probability that it could reverse from here, right? It's huge resistance in the mid of a rally. That's what will happen. Finally closing flat. So that's what market we had. So, and 4 institutions sold today also. They're selling less, but equal amount or good amount of buying is happening in domestic institutions, so it's managed. And we have the 20 exponential moving average, but there is a resistance point that that this is the resistance, that violet color 50 exponential moving average is acting as a resistance right below that. So that's the next hurdle to clear. Levels to watch for the would be the Nifty 500, 600 point, Nifty 290,000. So let's see that. So the first resistance on the Nifty would be to conquer this 450, 19,450, 19,500, and then 19,600, then up here in 19,850. So that's the resistances downside, holding that exponential moving average of 100, I believe. Yes, that's 9300 is maintained. And this gaps, wherever the gap ups have happened, the black support zones, right? Solid supports will be there. There's 19200 could act as a very good support. That is right. And then finally 19,000 and then 18,800. That's the downside supports. And above in the magnitude, the first hurdle will be the 44K, 44,000 resistance on the upside, and then 44,200, then 44,500 zones, right? And supports could be the today's candle's low first. It's coming at 43,300 zones, and then it could go as low as 42,500 and 42,500 downside supports, right? That's how it is. And US indices still made in some green. We'll have to check out tomorrow what happens, but overall it's given a big reversal last week, and that looks fine there. Where the US bonds are showing some spike today, and dollar index also is spiking, which is not that great because naturally rupee will be weaker if the dollar is rising. US dollar currency pair also is at the peak on the top, has been staying there for long, and crude oil is fallen, which is good, and gold has also, the hedging instrument also cooled off after the market has picked up. Technically, the markets are still weak on the short-term daily charts. Sector-wise, if you see, Pharma performed, reality underperformed. Others are all flat. Sector is a sideways momentum. Rising up is what you can see. As I always say, no, if the market is resisting here and consolidating or breaking down once again and going to dip, it could be another opportunity for it to, probably the market may move up to the top of the channel towards the 45,300 and 19,800. It could move up to the top of the channel and then take. So every time there is a dip, wherever it makes a dip, it will be opportunity for investing part of it to have SIP investments on quality stocks. Traders has to be very cautious because you don't know what happens next day. Right, we have 3 days of gap up and consolidation, but overall it's a reverse that's happening. The correction of 6 to 9% has happened, and then half of that is already recovered. But still, you have to be extremely cautious because look at this trend line that's coming from the all-time highs. So that 19,600 at least has to be cleared consistently, and Bank Nifty, the trend line has breakout from the trend line. The green close has happened, but it has to clear and then take out the price action level. The lower high pattern would get breached only at the 45,700 zones. Until then, you don't know what happens. Until then, you'll have to see this parallel channel top. So probably market may move up to 45,200 and then then it faces resistance and then it falls. Right, that's what we are looking for. So corrections happen. Half of the correction recovery has happened now, but price patterns, the price action patterns have not changed yet. So cautious. That's all. Manage your risk, and if VIX is still maintaining the 11 levels, the volatility, but VIX has been behaving very unusual. Intraday granular volatility is very high because of the market participant pattern change in the recent times and algo trading and all that. So you have to be cautious and manage your risk and save your capital, protect your capital for the good times. Right? That's all I have. Happy trading, happy learning, happy investing. Bye bye.